Hello from Trend Signal for our review of the data and events for the week beginning the 8th of August. A quieter week this week, as tends to happen post non-farm payroll last week. For the start on Monday morning, equity markets quite steady up, dollar a little bit firmer, bonds a tad weaker, and sterling still on the slide a little bit. Far East markets, well, Nikkei was actually stronger as the Japanese yen weakened Sunday night, Monday morning. And I think despite Chinese data being a bit mixed to poor, the Hang Seng posted a reasonable gain of 1.5%. So the first week of August and global stock markets grind higher after the unemployment data last Friday. The S&P hit new highs. A better than expected non-farm payroll really confirms that the US labor market remains strong with a modest improvement in wage growth and also average hours worked, which helped push the US dollar higher. That really followed a weakness in the early part of last week. But a strong labor market has helped push equities higher, but it's now pushed up, I guess, the chances of a rate hike. Unlikely in September. I still think it's around 15%, but the probability for December now is 38-40%, so that's increased by about 5%, but hardly decisive, I would say, for now. UK markets were treated to a triple whammy from the BOE as the rate setting committee cut rates for the first time since 2009. And QE was restarted with a $70 billion worth of sterling's worth of asset purchases, split between 60 billion of gilts and 10 billion of corporate bonds. In addition, the bank announced additional lending measures to ensure that the banks pass on the full interest rate cut to borrowers, which effectively is protecting the little margins that the banks still have. I think the interest rate cut was not the main reason for the fall in sterling. That would have been reasonably well telegraphed, but which is more likely down to a couple of things. Firstly, a surprise restarting of the QE at the same time, and also the MPC hinted that the bank would cut rates again if circumstances warranted it. The reaction in the market suggests that those circumstances will probably arise. However, I think that the Bank of Japan also suggested that negative rates would not be appropriate in the UK. Not sure whether that means that the BOE won't go into negative rates or not, but it's open for discussion. But anyway, sterling slumped on Thursday last week by about 170 points. Looks a little bit knee-jerk for now, but Mark Carney, the Governor of the Bank of England, hinted that the bank had done pretty much all it could do for now and that some fiscal adjustment would be needed. So over to you, Mr. Hammond, our new Chancellor of the Exchequer, and I guess the autumn statement is the most obvious one. Okay, as far as data is concerned, let's get on to that, get away from rates. It's a fairly light calendar, as I said. In fact, it looks like Friday is probably the most important day of the week. We have prelim German GDP coming in at an underwhelming plus 0.3% for the second quarter. US retail sales, normally an important number. It's the core number that we look at, which excludes more volatile components, food components. And consumer sentiment, the prelim University of Michigan's consumer sentiment number, 91.5, still very buoyant, the US consumer. I think that is a good leading indicator that suggests things will continue to improve in the US, unlike elsewhere. Other than that, we do have some data out in the UK, and it's the UK data that will continue to worry or focus investors' minds because that very much has a significant effect on equity markets and obviously sterling on the foreign exchange market. So we're expecting an unchanged figure for last month for manufacturing production. Manufacturing is not such an important part of the economy overall, but it still employs a lot of people, so that will have some effect on the markets if it misses that consensus. So really, that's it. In fact, so just one other thing, that we do actually have the Reserve Bank of New Zealand and their monthly policy meeting. That actually happens on, well, Wednesday night. It's actually Thursday morning as far as the New Zealanders are concerned, but at 10 o'clock in the our evening on Wednesday night, we're expecting the Reserve Bank of New Zealand to cut rates from 2.25% to 2%. Low consumer price inflation and a very strong New Zealand dollar means that the Reserve Bank of New Zealand are highly likely to cut, and that's what's expected. If there isn't a cut, that would probably cause the fireworks. Otherwise, we're expecting that rate cut. Otherwise, it's pretty much priced in for now. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.